Welcome to Profiletraders. This is Reza and you're listening to my market analysis for January 24th. It's been few days since the last report, but if we look at the daily chart of the S&P futures here, we can see that we went through several days of a sideways chop where really nothing was happening and we were contained within a very tight range, until today where we see a little bit of a sustained move to the upside. So let's take a closer look at it and analyze it. The record all-time high of the market was 2277, and this last push up, or the last leg of a push up, came in exactly from 2255 level. And when we did reach this 2277, we already had 20 plus point of an up move. And possibly because we already had 22 plus point of an up move, market got exhausted when it did reach the breakup level of the all-time high, and as a result we went rotational and we broke marginally or closed marginally below it. However, based on the day's action, it is without any question that the buyers took control over the market, and the close near the high is a clear victory for the buyers. So now my support zone based on today's action becomes 2271 and a quarter to 2267 and a half. If price drops within that area overnight or tomorrow early morning, that's where we should find support. And I can definitely see a future attempt to come and break today's high and create more of an upside move. You have to understand the philosophy of what is taking place. Since Trump's win, a very large amount of professional investors did not participate in the move. Everybody is waiting for a pullback to happen. Pullback is not happening. Everybody is waiting that there is some profit taking place. Nobody wants to take profit and pull the money out of the market. And therefore, if there is a break to the new all-time high tomorrow or the day after, we could see definitely a very violent push up, because money will be forced in. There will be anxiety from the money managers to fall behind, which is called performance anxiety, and this move could become very parabolic, very aggressive to the upside. Any moment or any time that we break the 2267 and a half, then my downside objectives will be 2261 and a half and then 2258 and a half. So until 2267 and a half, this zone here holds, I definitely see further push to the upside, and the market is on the very bullish turn on the short term based on the very aggressive, sustained and successful move up that we saw today. Now looking at crude oil, we can see a very obvious price divergence or a negative divergence versus the market. Market closed near the high and crude close at the low, which is a definite negative. Now with that, we keep in mind that tomorrow we have the release of oil inventories. Wednesday always at 10:30, that's when they release the numbers. That will have a huge impact on the price of oil depending on what the reserve numbers will be, but that put aside, which is an outside event we do not control. Based on today's action, it is looking bearish, and this could also be considered as a double top failure after we came and retested this high here, unable to close past 53 and a half, and we closed below 53. So now I have three levels of resistance: minor 153.20, major 153.42 to 53.66. As long as we remain below the 53.42, I have three downside objectives: 52.50, 52.10, and 51.84. So let's see what happens tomorrow. It's going to be very interesting. Both of these markets should move very aggressively, and it's Wednesday. Usually Wednesdays are known to be very aggressive in terms of price range in all markets. Thank you for listening. This was Reza with Profiletraders. If you're interested to learn market profile, check our courses. You can get all 5 of them. 1-year membership to my trading room for $550, 30 days money back guaranteed. Thank you and good luck for tomorrow.